The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the May 29th terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is, folks, the intelligence for creating financial freedom. Hope everyone had a great evening out there. My outcome for the next 60 minutes is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, I don't know about you, but living up to our potential, I know this works for me. It's something that you and I believe we've got to master each and every day. Yeah, it's a daily thing. We've got to decide if we're going to be on top of our game or not. So let's begin our day with empowering beliefs. It's a lot easier to do that. My favorite is the one that summarizes it all from soup to nuts out there, and it's called Become Your Own Electrician. This summarizes all of the books, all of the workshops, everything that I've been to. If I could give one piece of advice to everyone, it would be this. It would be to become your own electrician. You see, the reason is that by about the time that we're 8 years old, so for those of you that, like myself, have got grandkids out there, take a look at those grandkids. I've got one that's 6, one that's 4. Take a look at them. Because by the time they're 8, they basically are wired up. Now, do you really think when you take a look at an 8-year-old or a 7-year-old or a 6-year-old or a 9-year-old, and that's what we're going to use it as guidelines, do you really think by that time all their wiring is really the wiring system? Because the wiring system are their thoughts about what it is that they've learned or what they've observed or what they've interpreted. Because that's the real key word. Their interpretation about maybe the way that you or somebody else responded is what's now been wired. So what we've got to do is we've got to become our own electrician. And the reason is because beliefs, here's the key thing. Beliefs either create or destroy. You and I, we're the ones, and this is what our kids need to understand as well, that we're the ones that have that awesome ability to take any experience of our lives and create one that either empowers us or disempowers us. That's really what's going on inside an 8-year-old, a 7-year-old's mind or what have you. And that's really, we got to understand, that's our wiring system too. So what I want you to do is I want you to think about it like this, because there's only one thing in life we can control. That's the meaning we give to something. That's really, when you think about it, that's the beauty of the markets that we trade. It's about having bulls and bears. One that sees an event right now, right this very second, somebody is selling something. They see it as a selling opportunity. Either they believe it's not going to go up, and somebody else who they're selling it to, guess what they think? They think it's a buying opportunity. You see, it's our beliefs. It's the meaning that we give to events, whatever it might be. We are the ones in control of that. And that's pretty cool when you think about it, because when we have that kind of control, it really means what we can or cannot do, what we consider possible or impossible. Really, it's not a function of our capabilities. It's more likely a function about our beliefs, about who we are. And that matters because all of us are trying to break through. And all personal breakthroughs begin with a change in beliefs. And the way to do it, the easiest way to do it, is find your disempowering belief. Find your weak link out there. And then take a look at that, and take a look at it, what it's cost you in your past to have that belief, what it's cost you right now today, and if you were to continue that for the next year, 5 years, 10 years, for the rest of your life, how good is that going to make you feel at the end? That's really what's referred to as that Charles Dickens process. Folks, don't do this in your head. If you've got problems, don't solve them in your head. If you could have solved it, you already would have done. Put it down on paper. Put it down on paper, folks. Now, knowing what you don't want is just as important as knowing what you do want. That means you got to have that down on paper, too. And you need to know the strong reasons why. Why is it that you want to accomplish whatever that is? When you know that, then you're going to enjoy the idea of adopting a new belief system. You're going to replace that old disempowering belief, and you're going to replace it with tremendous pleasure of adopting that new belief. Because at any moment, a decision that we make can and will change the course of our life forever. Could be the next person you stand behind in line. Could be the next person you sit next to on an airplane. Could be the next phone call you take, the next phone call you make. Could be the next movie you see. Could be the next book you read, the newsletter you subscribe to, whatever it could be. Any one of those things will end up causing your floodgates to open. And then all the things that you've been waiting for, guess what? They will fall into place. Yes, folks, that summarizes it all. Make sure you do all you can do. It is Terrific Thursday. This is TFNN. I'm going to do all that I can do for you. I'm Steve Rhodes, and welcome to the show right now. The markets, what are they doing for us? Not a lot. We can actually go barefoot skiing out there. It is summertime. Do you like to water ski? Water skiing is great. Talk about getting a workout in. Water skiing is great. It is much nicer to go barefoot water skiing when you've got a flat surface. And right now we've got a flat market. You've got the Dow's up 5 points. S&P is up 2 points. Composite up is 9 points. Russell 2000 is up basically 0. So we got a flat market out there. Let's go water skiing on the Russell 2000. Biogen, BIIB, that's the leader in the clubhouse. That's up $7.50 out here. Intercept Pharmaceuticals going back and forth. It's up about $7.50, $7.60. Chipotle Mexican Grill up $7.50. Hillshire Brands up $7. Palo Alto Networks up $6. Apple up $5. Mercado Libre up $5. Popeyes, LA Kitchen, or La Kitchen. PLKI, that's up 10% this morning here. That's up $4. Simon Property Group, SPG, geez, haven't taken a look at that for a while. That's off $11. That's down about 6.5%. Tech Data Corp, a company headquartered in the Tampa area. TECD is the ticker symbol. That's down 5%. Ed, forget the guys. I know the father. I don't know if he's still alive. He moved out to California. Can't remember his last name off the top of my head, but played golf with him several times and great guy. Son is a good kid as well. Michael Kors, that's off about 3%, down 270. Caesar Stone, CSTE, off about 5% here this morning. Our call number is 877-927-6648. You know, if we take a look at the NDX 100 here, kind of interesting. The NDX 100, if I draw a trend line coming off of the lows back here in June of 2013, and I use that as my touch point, and I use the little doji-style candle from February 5th out there, another important low. You know, the NDX 100 formed an A to B equals CD to the downside. Let's go take a look at that. The A point on this was the high from March the 6th. The B point was the low on March 27th. The C point out here took place on April 1st. I believe it was April 1st out there. And what it did was it formed a 1 to 1.272 A to B equals CD to the downside. Now, not that patterns might not repeat themselves, but if, in fact, the NDX was to make a 1 to 1.272 A to B equals CD to the upside, well, the price projection on that would be 37.4360. Right now it's trading at 37.20. What also is noticeable here is that price broke through that trend line. That's the black diagonal line on my screen out here if you're watching this on Tiger TV. Broke through that trend line, and yesterday, well, 2 days ago, I should say, today's what, Wednesday. We've had a short week, so it was Friday. It was the trading session of May 27th. Price broke back inside that trend line. Now, it's just kind of hugging it here right now. It's a little trend line hugger, not a tree hugger out there. But it does look like it wants to at least go test the highs, maybe take out the high from March the 6th. I suspect that what it really wants to do is take out the high, 37.38. Hey, remember back in February, you know, in the early part of February, everybody thought that this was going to come, that the NDX was leading the market down. Well, if you were a person who was thinking that the market was going to lead, that the NDX was going to lead the market down, would you not also then switch and say, hey, the NDX is the one that's leading the market up? Because at that point in time, if you had said, no way, no chance this thing is going down, it's going downtown, well, guess what? It's made it all the way uptown. It's above any retracement level, so it's now wanting to make that 100% move of a move. It's above the 0.786 level out here. It's back inside the trend out there. That's a trend line going back to June of 2013? Yeah, June of 2013. So looks pretty good out there for the NDX 100 as we speak right now. Let's go take a look at the Dow. Let's go take a look at the week link out here. See if I can find, where's that chart out here? We'll take a look at it in a couple different time frames. So let's look at the Dow here right now. She is really struggling. It's trading at 16,623. Just can't find its feet out here. But yesterday's session, just a sideways day with light volume, so no real reversal out here inside of the Dow. In fact, if we were to trade like this and close above, maybe tomorrow, next day, get above 16,688, it gives you a nice continuation candle pattern out there called the Rising 3. So, I'm not saying that that's what it's going to form out here. The Dow is the laggard. It is the struggler. Of course, if we take a look at the ETF structure out here, let's go take a look at that. It still has the bearish patterns. They're still really in play when we take a look at the Dow Diamonds. Now, in play from one sense, in that they have not taken out the top of the island reversal. The island reversal that had formed over the period of really May 9, May 12, 13, 14, and then finally on May 16th out there. That little island over those 3 trading sessions. Prices closed back inside it. And so really the island, for all intents and purposes from a technical standpoint, is over and done with. Right now, if we take a look at yesterday's action out here, it pulled back and it was trying to test the gap that it had created, the gap up that it created back on May 27th out there. It tested it yesterday. The pullback was 3.6 million shares after the day before, going up at 2.5 million. Well, that's not so good. But the it's just actually I thought it was pulling back on lighter volume. The Dow Diamond, I'm mistaken there. The Dow Diamonds did not pull back on lighter volume. Nonetheless, is it the Dow that's going to pull everything down, or is it going to be the NDX, the composite, that's going to go ahead and move everything to the upside? You know, if we take a look at longer-term charts out here, because we are nearing the, it's amazing just how time flies. Isn't it amazing to you how time just simply flies out here? If we take a look at a monthly chart out here, let's go back and take a look at the Dow. Let's put the Dow on a monthly chart. And I'm also going to put up the Dow futures momentarily. But let's take a look at the Dow Jones Industrials out here. There's actually nothing on a monthly chart. There's nothing bearish about this. So even though we can talk about, or I can talk about, that it is a bit of a weak link out here, and most certainly, and when we take a look at a daily chart, it most certainly is. It's not participating like the S&P, like the composite has, like the Russell 2000 as it's come off of the bottom out here. But when we take a look at a monthly chart, there's nothing bearish about what we're looking at from a monthly time frame. And when you put that together, it's kind of interesting. When you put that together, that's where I'm going to go back to the futures contract out here. We take a look at the Dow. So until something else shows up on our screen that tells us to think otherwise, what we've got out here inside the Dow futures, let me shorten this and move this out here. Let me move this off to the side, that little consolidation box. What the Dow futures have been doing is trading in a 600-point consolidation zone. So they've been trading a 600-point consolidation. The daily chart we're looking at, this goes back into the February time frame, February 14th, the low there, the high that came in on April 4th, sets up the top of the consolidation. So what it really says is that what the Dow wants to eventually do, when it can find its feet, when it can find its balance, is trade up to the 17,000 mark. So unless it gets back into the consolidation, unless we see some other kind of reversal signals, that is the current message of the market. So that's in essence the putting the daily together. The monthly looks very bullish. If I go put up the weekly chart using the Rhodes momentum indicators out here for the Dow itself, let's take a look at the weekly chart, see what we've got here. The Dow is showing that it's, it made higher highs. It made a price relative strength divergent pattern back here. That was during the week of May 16th, but it didn't have any follow-through last week. So no follow-through says it that pattern is now one that is a tradable pattern out of the weekly chart. Inside of the Dow is actually bullish. So it's just kind of struggling out there. I think it's maybe doing a Michael Jordan head fake. Moving left, getting ready to go right. Getting ready to go right, up and high. 877-927-6648. Pretty flat market out there. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, Visit the front page of TFNN.com.
Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Right now we've got a totally flat market out here, so I've got to keep you entertained and, let you know what's going on. In fact, if we go take a look at the S&P futures contract out here, take a look at the ES Mini, what I want to do is let me just change this to a more intermediate type time frame. Let me put up the 120-minute chart out here so I'll give you a real good feel as to what is going on. We'll take a look at the ES here. Yeah, I've got enough days loaded inside here historically. Let me pull this back. So if we take a look at the ES right now, it had gotten into the extreme overbought condition. It's when it gets, we're using the 14-period relative strength indicator out here. So it's been in got into that extreme area most recently back around the time frame of about 10 o'clock in the morning. That looks like on May 27th out here. So it has formed a little price relative strength divergent pattern right here. This was at 10 o'clock this morning. Coming into noon, it looks like right now, if we get a close below the open of that 10 o'clock session, which, by the way, that was at 1909.75, you'd see a bearish engulfing candle. If you saw some additional, so that's at 12 noon. If by 2 o'clock you were to get so 12 noon, if you get a close below 1909.75, you'd have a bearish reversal signal. If during that next 2-hour session you see even lower close, you'd have confirmation of that, and then you'd be taking a look at a retracement. You'd be taking a look at a market that is working off finally a market where it would be pulling back. It would be giving folks an opportunity to get into this market from the long side, because until we see some other types of significant reversals on the daily charts, weekly charts, monthly charts, and so forth, unless we see some other things fail, such as the VIX index trade above the 50-day exponential moving average, or the euro-yen completely fail at where it's at out here. What you need to be doing is prepping and looking for long entry points out here. Now, I'm not saying that the market's going to pull back. The signals thus far, that's what's going on. Now, the overbought condition by moving sideways, which in essence is what's really occurred more likely over the past several hours, I know going back to about 2 o'clock in the morning, on the 28th out here, with the market just really moving sideways, it's worked off some of that full overbought condition, and so therefore the market can easily move higher out here. So that's what's going on. We take a look at the S&P futures. Now, your question might be, hey, where could it pull back to? We looked at this yesterday as well. It never came to fruition. So, you had the sellers giving the best punch that they could yesterday, and they really couldn't come up with much. They couldn't really muster much when it came to selling. So if I go back to that 120-minute time frame chart out here for the S&P futures, that's the Dow, by the way. Let's take a look at the S&P futures out here. Of course, we'd love to see an A to B equals CD to the downside, a Gartley buy pattern actually form out here. That would be a nice entry point, but that is not in the cards when we take a look at the ES Mini, not as we speak. 1895 would be a target. That's your dead cat bounce out there. I mean, that would be nothing. There'd be nothing wrong with the market. 1895, you're at 1909 right now, so that is, 14 points or so. That might feel like, okay, the sky is falling in or something like that, but got to put things in perspective. It's been a nice, strong move, and this is just simply going back to May 20th out there, so been just simply a strong move up. There's really no real bearish signals out here other than the one where we took a look at just a slight price relative strength divergent pattern. That could be setting up. But if you look at the ES Mini down here, this is the 120-minute time frame as well. If you take a look at it, what we can see, it's neither overbought nor oversold. So this baby's got room to run to whichever way it wants to run to. If I go back and I take a look at the Euro-Japanese yen, waiting for some type of bullish reversal signal here as it formed its 0.786 Gartley buy pattern. Nice, real nice pattern out here because you've got a 1.618 expansion of a set of swing points. That is the B to C swing point, 0.786 retracement of the lows from February 4th to the high that was put in on March the 7th out there. We'll see if this pattern comes to fruition. With it being also in an oversold condition, it really stands a chance of being able to do that and maybe just explode to the upside. So since we've got a relatively flat market, let's go take a look at some stocks that are actually moving out here. And let's look at moving to the downside. Simon Property Group is the leader to the downside, off 6.5% out here. Looks like they've cut their full-year projection. That has sent the stock moving lower. Volume behind the move so far, about 286,000 shares have traded hands. On my screen here right now, this is the e-signal chart. On this chart here, I've got a number of different tools. One of those tools is the TAS signal box. And what we've got here, the market profile system, really. When we take a look at the market profiles out here, you can see on a daily chart, number one, it's below the unfair low. This is where you can be short. Now, the problem is that it did it all in one swoop, in one day. And it's down against this little, the blue lines on here, they kind of act as channel lines, but it's a linear regression channel that is out there. They're really great to use as targets for where price moves to. Well, to the downside, Simon Property Group actually moved to the target zone. We come back from this next break. Let's look at the weekly chart and see where price is up against on Simon Property Group using the TAS market profile.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 6 points. S&P is up a couple. Composites up 10. Russell 2000, virtually unchanged. It's off 60 cents out there. Now, we were talking about Simon Property Group before we went to break. We were looking at the daily chart out here, and I popped the weekly chart up on my screen. So we're using the TAS market profile system out here, so it's helping us to understand where there's levels of support, levels of resistance, and it's a weekly chart, right? Weekly chart's going to have more meaning than a daily chart out here. Now, a way that you can use this, and it's great because you can use it. You can use it on individual equities. You can use it on ETFs. You can use it on futures contracts. I highly recommend that. It's a great tool to add to your trading. It's a great tool to add to conviction behind the moves out there, what you should be looking at. It's nice when patterns are completing potential reversal patterns, either as things are making lows or highs, at areas where this is just giving you another confirmation signal out there. So, and it's very easy to use. Just go over, you can check out the eSignal software. That's what's on my screen out here. I think you get that, test drive that for 30 days out there. It's a great world we live in. You can pretty much do anything for 30 days out here to test drive. And in any event, so let's say on point here. and we take a look at Simon Property Group, what we'll notice is if the red horizontal, the light blue, and the green horizontal lines going across my screen, those are what are referred to as the resistance support point of control, or unfair high, unfair low point of control. The blue center line, that's where you've got the most activity. It's like driving down the road. It's where you get congestion, where you see price just kind of hanging out. The red lines out here, those are your resistance lines, your unfair highs when price gets above that. One way to trade it, there's really a couple different ways you can use this tool to trade. When price is above a resistance zone, it says, hey, it's like driving down the expressway, getting past that congestion area, and you can open up your car. It just simply says you can be bullish. Likewise, when price is below the green line out there, that should have acted as support. If it doesn't, it's saying don't be long. Don't be long and strong. It says you can go ahead and be short if you wanted to short something. Now, what's cool about the weekly chart here for Simon Property Group, the market profiles don't change. They change in the future, but they don't change in the past. So I've got all the past market profiles on a chart. You know, what you want to do is if you're trading something specific, you want to find market profiles that work consistently, that help you to identify areas of support or resistance out here. And if you take a look at the market profile high, I'm just going back to May 20th, 2013, the market profile high there was right around the price point of 182.76. The actual session high on the trading session of the week of May 20th out here was up at 182.45. That acted as resistance. Now, you didn't necessarily have to short it. That's one way that you can trade these, is that when price comes up against resistance, you can go ahead and you can say, I'm going to go ahead and take a short, because maybe it's completing a pattern or whatever your logic is behind taking that short, and know that if price closes above that area, that says you were wrong on the trade and you want to go ahead and get out. If it does hold as resistance, when price is moving down towards the blue line, or the green line, the unfair low out there, that's a price where you might want to start taking a look at really tightening your stops, taking your profits, maybe going in the other direction, whatever it is you might want to do. And if price closes below that area, that's at a time where you want to go ahead and go to the short side. And take a look at, as price moved through that level on a weekly chart back here the week of May 27th, how that really gave you the nice signal to go ahead and get short. Well, in the case here of Simon Property Group right now, even though it's gapped down, it's got some pretty good volume behind the move. What you'd want to see is this close below 163.84, which is a nice price point to be able to short from. You'd like to see it get below that, and then you'd be looking for price probably to move on the weekly chart into about the 145-ish type area out there or so. So that was on Simon Property Group. Ticker symbol is SPG. We took a look at it on the daily as well as the weekly chart. Let's go to our man John in Philly. John, thanks for calling. Thanks for holding. How you doing this morning?
Hey, I'm very well, Steve. How about yourself?
I'm doing just great. Thanks for asking. How was your Memorial Day holiday?
It was terrific, and unfortunately, I woke up to a rude I woke up Tuesday morning to a rude interruption, kind of like you ran into, I think, last night, where I was infected, or one of my key systems, computer systems, was malware infected, which created all sorts of other duties to do. But that's what we live with, evidently.
Well, it is. What I'm actually doing, John, I've built a new computer, and this specific computer, I'm not even going to put email. I mean, this is going to be a clean trading computer, so that because I am tired of dealing with those issues. Now, I don't know if this is going to work or not, if it truly does stay disinfected, so to speak. But I sure am hoping that, and I'm only going to, on the internet, I'm only going to websites that I absolutely trust or know, and we'll see. We'll see how this works. But,
Steve, get out the Lysol, baby.
Yeah,
disinfect.
Exactly.
Steve, thank you very much for kind of sharing your overview regarding the NASDAQ 100 NDX. Could I ask you to bring up on the market profiles what the parameters for weekly and daily on NQM, that's the NASDAQ 100 futures, are these days?
Yeah, absolutely. So what I'm pulling up on my screen here, in order to be able to identify the proper market profiles, what the TAS market profile, it has to stitch together all of the prior contracts in order to be able to have all the proper volume data out there. And so it actually shows up on my screen as like a squiggly line N and Q out here. So on the weekly time frame right now, the unfair high, so the resistance area, is at 3660.55. So price is above that. Now, what's interesting is that one of the other tools that the folks over at TAS provide us with is something called their what's the name of it? Their navigator system out here, and it's kind of like when I show divergence with price relative strength divergence. The way I kind of think of it is as the same. In this case here, we've got the market moving higher, but we don't have that same confirmation when we take a look at that navigator type system out here. That doesn't mean that it's going to fail or anything, because over time it can resolve itself, and it needs to really be able to do that. But from just a straight out answer to your question, the unfair high is 3660, and that should act as a support level. And as long as price is above that, it says, other than trying to find some other pattern to pick a top, it says it's okay to be long out here. That's what the weekly shows. Now, I haven't put you didn't ask for it, but I think I can put a monthly out here. Let me see what the monthly real long profile, let me see if the monthly pops up on it. So the monthly chart, so you didn't ask about it. Now this is kind of cool because I haven't looked at even that long term of a time frame. The monthly chart, the market profile unfair high is at 37.2625. So we're trading close to that level. In fact, the actual high that we've seen here so far this month is 37.23. So in May has what? May is May 30th? May 30th. So tomorrow's the last day of the month, isn't it?
Yes, it is.
Yeah, okay, got that right. So it'll be interesting to see if it actually closes above on the monthly chart out there, 37.2625. That would be the number to take a look at. Now on the daily time frame out here, the current unfair high. Let me just delete some of these things out here. Is A to B equals CD patterns. Boy, that's all the way down at 36.17. This thing is in long and strong mode out there. Now, you've got what's your target for the Nasdaq? Are you long? Are you short? Tell me what you're doing.
Yeah, I've been trading exclusively from the long side, Steve, since last Wednesday. That would be Wednesday the 21st.
And what kind of target are you looking at?
Yeah, I'll tell you, one of my pattern tools tells me that the action this past 7 trading days coming out of the chop that was going on the preceding 30 tells me that this rally is only midway done with a target of 38.30 as a minimum. I'll further tell you one really reliable tool that I've used over the years was taught to me 30 years ago, one of Tom DeMark's systems, his sequential system. Mm-hmm. If Friday, tomorrow, if the NDX cash closes over 3671, 3671 happens to be the close of last Friday. So if we close over that tomorrow, and it appears that we will, barring a big sell-off here, that gives me a 9-9 count on this DeMark sequential system.
Yeah.
Now, without belaboring the arcane technical counts, the message of that signal is that a strong uptrend is in force and will carry forward a minimum of 3 weeks and conceivably longer. So that system, in addition to the pattern tools that I've looked at, tell me the NDX 100 now being the leader will extend further. And looking at that market profile on the weekly, of course, that wouldn't be a surprise. So I've been trading since last Wednesday exclusively from the long side, and like you, am looking at that price action, saying, "Gosh, the message of the market is we're headed higher."
Yeah, it really is. What's really interesting, so when you talk about the TD system out there, and I've read a couple of the books Tom is great. I mean, he's put his system out there for public information. You've got to read the books. Now, those books, I don't know about you, but man, I've had to read and reread to really understand some of the the TD combo, the sequential aspect, to really try to figure it out. And actually, there was a guy that inside the Ensign software, there was somebody that actually tried to create those formulas, which I was able to download for free and use, and I've actually got it up on my screen here right now. But I also know that he was on the airwaves not too long ago and was, again, calling for market highs using the TD combo count. That's at 913 type count out there. And now what I don't know is I wasn't really paying attention to where those highs were at. Was he? And I don't know. Did you all see that or observe that or read anything about what he was talking about then?
I heard that and understand where that conclusion comes from, Steve.
Yeah.
That was applied to two indices, the Dow Jones and the S&P 500.
Ah, okay.
Both of which pulled back from those highs back on May 12th. And the subsequent rally in the S&P in particular is negating that signal. And mind you, in using any of these technical tools, one has to be aware and be cognizant of how they can be negated, and if they are, to merely respect that. And that's the case in point here. As applied to the S&P 500, the NASDAQ 100 index using that system never gave any such sell signal, and in fact is on a very bullish mode as we speak. So
what I like about that is the fact that I remember in one of the books that I was reading. So he used to work for Paul Tudor Jones, and he developed this system, either for, on behalf of, with Paul Tudor Jones. And I remember the quote. It just stuck in my head, like many quotes do. And what he recognized about the DeMark system was when they failed. So when you got these failure patterns, they failed miserably, meaning that they were really strong initiation, continuation type moves out there. So it is interesting. So thanks for sharing that with me and our listeners out here. So it was the S&P 500 where he was calling a top, and I don't know if it was on a weekly time frame or daily chart where he was coming up with that. But by the mere fact that we've taken out the highs, probably suggests that pattern has failed at the moment.
Indeed.
Is that your take?
Yes, that would be my conclusion.
Yeah. So, and with the NASDAQ having kicked in, the Russell 2000, the Russell 2000, other than the last couple of days here, has had a real nice move off of the bottom. So with the Russell participating the way that it is, the NASDAQ, taking over leadership role again, and the S&P 500 failing using, a good system for identifying reversals, the TD system out there, Tom DeMark system, and you put that together with a Euro-Japanese yen, which I like to use as a real liquidity gauge. If with it forming an oversold 0.786 Gartley buy pattern, if we see a bullish reversal here, should be a nice summer. Should be a nice bullish summer out there.
Steve, if you would like me to hold through the break, I can share one last idea.
Absolutely.
On the FTSE, it's kind of a segue to something you had to say about that index.
Perfect.
20 minutes
That'd
ago.
be good. That'd be great. That's our man John in Philly. We come back, we'll go take a look at the FTSE as well. Right now, you've got the Dow up 20, composites up 13, S&P is up a couple points. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. We've got the Dow's up 17 points right now. S&P is up about 4. Composites up 11. And before we go back out to John in Philly, I had a question in the Tiger's Den to take a look at the weekly chart for the VIX index out here. Right now it's traveling out at 1168. And the question was, on a weekly basis, if we were to, in essence, close right here, would it form what's referred to as a bullish harami candle out here? And the answer is absolutely it would. Now, what I don't know is the reason behind that. So let me share with you. There are candlesticks, many candlesticks out here. There's only about a dozen that actually qualify as reversal signals, either bullish or bearish out there. And so you want to really kind of, that's where if you read books about all this stuff, what the books do is they talk about the candle signals, maybe what they mean. What I like to do is I like to use these candle signals with regard to what they mean and apply those to patterns and find some reversals out there. A bullish or bearish harami is nothing more than a pause button, like if you were to use a VCR or your television, what have you, and you put it on pause. So it is not a reversal signal out there. It is a bullish harami, though. Let's go back to John. In Philly, I don't even know if you're in Philly these days, but it is our man John from Philly. And you wanted to take a look at the FTSE or pass along an observation for our listeners. So, John, take her away.
Yes, Steve. You had remarked and shown how the FTSE on the daily and weekly was right up against prior highs.
Yes.
And I thank you for that. I wanted to mention one concept, namely, if in fact the FTSE currently we're around 68, 70, somewhere in that area.
Yes.
If, in fact, it rallies over 7,000, it is a very bullish signal not to be ignored. Here's why. W.D. Gann, back in the 30s, came up or observed that markets that had made double tops separated by a meaningful period of time, either months or years, when broken, was a very powerful buy signal. And as a recent example of that, let me just point to two indices that we all know very well. One, the S&P 500, and the other, the DAX. Both the S&P and the DAX made highs in 2000 and 2007 at the same area, so double tops on both.
Yes.
In the first quarter of 2013, both the DAX and the S&P surpassed the highs of those double tops, which was that Gann breakout buy signal. And the breakout buy signal on the S&P, just for reference sake, was that move first quarter of 2013 over 1575. Well,
yes.
Lo and behold, the breakout buy signal worked. And, of course, we've gone significantly higher subsequently.
Yes.
If we look at the monthly chart on that FTSE, we see the very same pattern where we had double highs in 2000, 2007. The FTSE has not, at this point in time, broken over. But if it does, that's a breakout buy signal, and I will then, if that occurs, assume the FTSE will be in a rally of a year's time or more, if that occurs. So it bears watching. Just wanted to share that.
No. Look, it's great, And when we take a look at the S&P 500, as you pointed out, its price projection over time is equivalent to the consolidation, that so-called 16-year consolidation that it was in. So it says that at some point in time it wants to trade up to 2350. When? We'll just have to wait and see. So, but it does look like things are setting up for a nice little summertime rally. John, thanks so much for calling. Thanks so much for sharing with all of our listeners out there. Folks, have yourself a terrific Thursday. Our man Basil Chapman is up next. It is Terrific Thursday. Then we got Larry Pesavento, Daryl Martin, David White, Andy Heck, and the Tom O'Brien Show. Have a great Thursday, folks. Look forward to seeing you tomorrow morning. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.